Welcome to Drilling into Crypto. I'm your host, Mohamed El-Masri. Every week I speak to the leaders that are driving the global financial revolution. Drilling into Crypto puts the spotlight on the importance of crypto assets, on energy markets, and on global monetary policy. In today's episode, we've got Jesse Phillips from Binance, Business Development Manager of Binance Mining Pool. And I'd like to give Jesse the chance to tell us in his own words how it all started, where you started your career, a little bit about your background, more about you. We want to know Jesse. We want to know what Mr. Phillips has been up to and how he led his career into Binance and the mining industry.
Sure. Thank you so much for having me. It's a pleasure to be here. I guess we could start the whole thing starts where a lot of people started in this industry, which was 2017. And for those of us that were kind of in this space at that time, it was really the Wild West. I was part of an ICO pretty early on, and similar to kind of what's happening right now, where increased regulation is really coming into the crypto space. That's kind of what happened at the around March 2018 with this ICO in Massachusetts. So, long story short, they came down on us, and I decided to kind of pivot, and I really wanted to work in crypto. I was really fascinated by what was going on in the space. And alternative investments, so to speak. And so basically the next day after that was shut down, we later proved that it was a utility token, but I digress. Essentially, my boss's son walked into the office that I was working at that time and had this very basic model of what proof of work mining could be modeled out as. And so that became the Harpia model. We ran that consultancy, talking with some of the largest institutional miners as well as mining players all over North America, all over the world for about 2 years until the end of 2019. And really kind of what we dove into at that point was kind of the intersection of, I guess, proof of work and macroeconomics. We did data modeling regarding a lot of the hash per watt and hash per dollar stuff, which I'm sure we'll talk about later, as well as network difficulty, modeling a lot of it on kind of a modified version of Moore's Law. And so with that whole consultancy, I ended up kind of getting to know a lot of the mining industry pretty decently. And so earlier this year, around July, Binance Pool was looking for, I guess, someone to help with the global side of really of the Binance Pool, which it had launched in, I believe it's April 27th. And so I came on basically to provide a lot of the same, or really provide to a lot of the same clients that we had been talking to at Harpia way before, a lot of these newer, more exchange-focused mining pool setups. So Binance Pool now is either second, I believe we're second today, or third, it kind of swaps, largest mining pool in the world. We've gotten that in under 12 months. I believe it's 9. And that's kind of a monumental feat. But fundamentally, what we're trying to do in this space is merge the exchange side with mining side and create kind of a vertical stack of value. And so it's been a real pleasure kind of working with that and kind of a continuation of my work in the mining space.
You have a background in web design, graphic design, and data analytics, if I'm not mistaken. And
Sure.
how did that play into your shift from that world and into Binance Mining Pool? And I'm sure a lot of people take for granted the data that they can extract from their mining operations.
Yeah, a lot of what we saw early mining, and I'm not talking about 2013 early mining. I'm talking more kind of the first major mining boom, which was around 2017. A lot of what we saw was this quest for efficiency, and that's something that I think governs even mining today. But when we talk about that quest for efficiency, I think a lot of miners, and what we saw throughout our time advising in the space, was that a lot of those miners that didn't look at other external factors, including using data to quantify what they were doing, ended up basically not being part of the space anymore. I think data at the core of all of it goes much deeper than just finding a good electricity price and understanding kind of what your machines are going to end up doing.
Yeah.
And so really that was the bread and butter of our consultancy. We were doing those types of data analytics well before I think most people in the space. And for those of the mining, the mining operations that listened and that also did it themselves, I think they're in a lot better space today. My background particularly is also in the intersection of business and investment and business development with those data analytics. So I'm dangerous enough on one side to understand what I'm looking at. And then I also kind of understand the business side of it. And I joined a team that has much smarter people than me. I can tell you that. So
it's good to be in an environment where you feel your surrounding have much more insight and that you can learn from instead of being in a surrounding where you have to teach, right? Sometimes I'd rather be the student in most of the times because you learn new things, and the more you learn, the more you grow. And this is what we've seen with this industry. You need to be ready to learn new things. You need to be ready to adapt with the shifts that are taking place in the market. And the market is moving faster than we are. And the pace of the way the market has been moving in the past year leading up to today, and just in the first 8 days of 2021, we're seeing a major shift in the type of players that are really going to be active and remain solvent in this market. And
absolutely,
I think there is this gap between the current cycle or the current development cycle of mining pools and where they actually need to be in order to make the design and the user interface and the way the mining pools functions and the services and features that they offer. There's this gap between where they are today and where they need to be that needs to be filled. And I feel like yourself and the team at Binance Mining Pool are working in order to fill that gap. Can you tell us more about where this is going?
Yeah, I think fundamentally there's a changing role in terms of mining pools. If you really think about kind of the broader market, you have miners really exploring for the first time private sector seigniorage. And for what that means is for the first time, I mean, more or less, they are printing money, right? Seigniorage used to be kind of kings and central banks. I have this piece of metal, I stamp it with, this head on it, and suddenly the value of that metal, right, is not just the raw value, but also kind of the market value. And that delta is where you make your money, right? So if you look at miners in that sense, right, that's really what they're doing. On top of that, you have you really have mining pools that are providing services for them, right? Aggregating hash rate, et cetera. But a lot of this comes down to kind of efficiency, as I've talked about kind of earlier in this segment, right? Efficiency not only in electrical efficiency, operational efficiency, but now we're getting into kind of where can I make as a miner that 5-10% extra. And so I think there's as I said, a really large and changing role of mining pools in that space, right? Previous examples of mining pools really take a service fee and don't really know who their clients are. And I fundamentally think that service is changing as miners kind of demand basically better efficiency, which means lower rates, right? So if you're in a situation where your bread and butter as a mining pool is just taking that service fee on top, say, 2.5%, 3% on top, right? Which has been the case for many years now. What you're really missing out on is the ability to also ingrain with your miners and extract a lot of the value throughout the stack, not only for the mining pool, but also add value to the stack for the miners. And so that's fundamentally, I think, the difference between us and a lot of other pools, right? We are an exchange pool, which is more of a new concept. But what we're doing is fundamentally blurring the lines between proof of work, right, which is minting, so to speak, minting your digital asset, and proof of stake and savings, which is what you do with it afterwards, right? So we have all types of different products, proof of stake products, as I've said, like our ETH 2.0 staking, that's partial staking. You don't need 32 ETH on that. We've got savings, which adds to, Binance pool internal liquidity, but also adds interest to our miners' pockets, right? One of the most popular versions of that is pool savings, 5 BTC quota. And, as of right now, I believe our miners are making around 17% per year annual. We've got B swap, which is liquidity swaps, and then everything else that happens under earn, which is all of your fixed and flexible savings, right? So really what you're doing with your asset underneath is really like kind of the next stage, as well as a couple of the other things that we're kind of iterating on in
That
this
is
space.
just incredibly amazing to see how finance has changed from where it was a decade ago and where it is today with these types of solutions. Because if you think about it, and just to simplify it for the listeners or anybody else who's trying to understand what proof of stake is, it's similar to a fixed deposit that you put at your bank for your savings or to generate a yearly interest, which the bank doesn't probably give you more than 1% or 2%, or maybe a few bips in most cases, right? And you're looking at this new industry or new financial mechanism emerge in a way that is really shifting the socioeconomic construct and allowing people to generate wealth at an incremental rate, or fractional rate, right? And that is what has always amazed me, and that is really astonishing about the crypto industry, because it always resonated with my perspective about how the whole socio-economic construct of the world is put together, and I feel it needs to be changed. And it is inevitably changing, with or without me, with or without you, and is taking place right by itself. And I think we are fortunate enough to live in this day and age and to be able to play our part. And I've seen you mention that you just want to be able to play your part in this growing industry, or in this growing sector. And we'd like to, hear more about that part and that role that you're playing. And I'm sure Binance plays a major part of that. And you spoke about efficiency, and efficiency in financial performance is one thing, and then you have the efficiency in energy. And when it comes to mining your Bitcoin or mining your cryptocurrency assets, how do you define this concept of zero cost electricity, and how natural, for example, what we're doing in Alberta through a company that I am an officer and a shareholder of, is called Brox Equity. Brox Equity owns a company called Brox Data Centers, Brox Energy, and Brox Power, and it's an intercompany integrated business model that allows us to acquire natural gas assets, extract natural gas molecules, convert them into electricity on site to power Bitcoin mining data centers that we design and fabricate. Now, the concept of using natural gas energy, which is the cleanest form of energy moving forward, and the fact that globally there's around $900 billion in stranded assets, or natural gas in the ground that cannot be extracted because it has no commercial viability or feasibility, this Bitcoin mining and crypto mining in general, its ability to tokenize the world's stranded energy, which could ultimately drive this financial revolution that you just mentioned, that Binance is offering to the new finance, right? The new finance world, is astonishing. And I'd like to learn more about what your thoughts are on zero cost electricity, because you spoke about the efficiency of finance. Now, in order to make that possible, you need the efficiency of energy to keep attracting those miners that are going to mine on your pool.
Absolutely. A lot of people think about, however you think about Bitcoin, right? People think about it differently. I've always thought of Bitcoin as an economic battery. And really what that means is it's a storage for electrons, right? There's a lot of talk, especially as you see kind of the bull run of 2020 into 2021 come into full effect, of people that are skeptical and they wonder, really, how is Bitcoin backed? And fundamentally, this is really the difference, right? It is backed by the power of production. That is proof of work in a nutshell. So the value of those electrons is really what is backing Bitcoin, amongst other things, as well as market sentiment. But if you look at that production, that is always trending towards zero, as is all service, right? All service providing. Really what you're looking at is just continuing on iteration until you reach zero in terms of efficiency across the board, right? Because as we spoke about kind of earlier, you have this concept of seeing your age, you have this concept of your production, as well as your market price. And that delta is